Well, welcome back to another episode of the Financially Free Journey podcast. And I'm your host, Courtney Dyer. And you guys know this podcast aims to dispel the seemingly complex topic of personal finances, money management, debt, savings, investing, and small business. So today I'm bringing on a guest that this is a really highly sought often and requested topic, which is real estate investing. And so I thought bringing on today's guest, Lindsay Davis, would really, make a lot of you guys happy because you're like, help us with real estate investing. And guys, Lindsay serves as the CEO for Spartan Invest, Atlas Rental Property, and then also Corinth Construction. And she's a millennial entrepreneur, and she has played an integral role in really creating 5 brands and 4 companies. And get this, guys, generating a combined revenue of almost $50 million. So I would say Lindsay knows what she's doing. And so I'm bringing her on today. Lindsay, welcome to the show.
Thank you so much. I'm really excited to be here and speak with all your listeners about turnkey real estate. So thank you so much for having me.
The first question is, how awkward is it to hear someone read your bio? You're like, okay, thank you.
It sounds very awkward, honestly. I'll be honest with you. It is super weird, but
I love
it's
it.
Part of it.
Every time I'm like, wow, you made me sound really, really cool. Right. No, I'm so happy for you to come on and talk about turnkey real estate investing, because this is a topic that a lot of people who are looking to become financially free, building passive income is the name of the game, right? And what better way, really, in a lot of people's eyes, than through real estate investing? And so, I just wanted to start out. I want to get into some nitty gritty with you, and I'm going to go straight for the gusto right now. What are the pros and cons of real estate investing?
Yes. It is a very, very hot topic right now, and for good reason, in that in the past few years, real estate has really been seen as one of the primary drivers to kind of independent and passive wealth for a lot of individuals. So you've got pros and cons of real estate, just like any other investment out there. The pros for real estate are obviously cash flow. You've got your monthly cash flow. You've got a great rate of return. You got asset ownership. You have tax benefits. The government wants you to provide housing. So a sound, solid financial investment that the government backs, it's really, really hard to beat.
Yeah.
The biggest cons is honestly just like a lot of other investments, but more so real estate, in that your return is in the hands of essentially your tenants, other people. So, you've got the risk of eviction, damages, neglect, purchasing a bad renovation or a poorly renovated property. So those are some cons to real estate. But, like I said, with all investments, there are pros and cons. And I can dive a little bit more into the pros, kind of if you'd like, but those are kind of just your high level pros and cons.
Well, I think when you look at any type of investment, there's going to be the risk reward ratio, and really understanding how to, if the risk outweighs the reward or vice versa, right? That's going to determine whether it's a good or a bad investment. And so it really sounds like getting into the nitty gritty of understanding how to find good tenants, understanding the eviction process, and how to maybe not hop into a bad property where the renovation, was more than you thought it was going to be. So, which I'm sure you're probably going to talk to us more about, kind of how to avoid those pitfalls. But yeah, look, the real estate market is so hot right now. How can individuals really get started in real estate investing and find a good deal on a property? Because like you said, that's one of the biggest cons, is like getting into a bad property.
Right. 100% deals are out there, through this hot market. Just personally, me and my husband have continued to acquire rental properties for our personal portfolio. So deals are out there. We're selling, investment properties to investor clients all over the country, all over the world, and they are generating fantastic rate of return. So the deals are out there. My biggest piece of advice, though, to anyone who is interested in looking into getting into real estate is don't get in a rush and be blinded by the low interest rates right now. I see a lot of investors that are like, oh my gosh, the interest rate is 3.2, or I can get a 3.6 right now. I got to buy right now, and they'll buy wrong. So that is a huge risk when you're first entering into real estate for the first time, if you're, if you've never done this before. But so the deals are out there 100%, but you have got to find the right market and the right team. And there are several different factors in what make a right market.
Okay, let's talk about that. What's the right market?
I can talk all day about this. I will fire it off. But
you're like, wait, that's why I'm here.
But the right market, I feel like can be made up by several different factors. I'm going to use Birmingham. So Spartan Invest, essentially, just so you guys know, full service turnkey company that purchases, renovates, and then manages the properties, single family homes. And then we sell those properties that we manage to investor clients, right? So we're finding the properties, we're doing the renovation, and then we're managing them after the fact. So we do all the work. So we're genuinely trying to be kind of the hands-off investment for real estate for investors. So I'm going to use Birmingham, which is where our home office is. It's where we started Spartan Invest. I'm going to use Birmingham as kind of the example market in what makes a great turnkey market, in that you've got a low cost of living, you have lower and, reasonable property taxes, you've got a good tenant to owner occupant ratio, and you've got a wealthy, diverse economy. And what I mean by that is kind of the jobs are spread across all different types of industries. Sorry, I was looking for that word. So like Birmingham, for instance, we are very heavy in manufacturing, tech, startups, healthcare. So our job and employment is spread across a bunch of different industries that, COVID is a very good example of how we were able to push forward and not lose a lot of jobs, because all of our jobs were not centered on entertainment, So
right.
Take COVID, for instance. Alabama was one of the states that was least affected from job loss when COVID first hit in March of 2020. And trust me, I'm like everybody else. I'm sick and tired of talking about COVID. I'm with you. But it is a really good example of markets that are sustainable and are not really factored in on one particular industry, in that we didn't see all of the mass job loss because Birmingham and a couple of our other markets, Tuscaloosa, Huntsville, Chattanooga, Tennessee, they are just not centered on the entertainment industry. So, we just didn't see that type of loss during that time.
Today's episode is brought to you by DB. Now, DB is a Scandinavian brand that makes backpacks and bags to help people on the move stay ready for anything. Now, from the streets to the peaks, DB's gear is travel tested by some of the world's best athletes, adventurers, and creators. And over the past decade, DB has designed and developed, released, and refined the best bags in the market. With DB's patented hookup system, you are able to attach smaller products to your backpack, your roller, or your tote. So we are teaming up with DB to exclusively offer you 10% off of your next purchase. All you have to do is use the code POD10, that's POD10, POD10, or just go to the link in the show notes. Guys, DB, it's time to move on and it's time to get going. Well, and that's important for the listeners to really remember, is just like with any investment, when we talk about diversification all the time, right, till we're blue in the face. And this is a prime example. This is outside of the stock market, where you're not necessarily having to worry about the returns of a certain company, but within a market, is it reliant on just travel, right? Is this a hot travel destination? For example, like a Park City. I live in Utah. Park City is a hot travel destination and a big part of their economy is based on the ski resorts, people flying in and out from all over the world. Well, you take a pandemic, for example, and there goes 90% of their economy. And so that's a really great example of why it's important to find the right market, because it's things that you don't foresee. And you're really mitigating your risk by finding the right market, making sure it's diverse, and also I love when you talked about having a good occupancy ratio. And so can you just clarify what that is for the listeners if they're not aware of what that is?
So we found that a good 60 to 40% owner occupant tenant ratio is kind of our sweet spot. And what I mean, 60% tenant and 40% owner occupants, and that you want a decent amount of owner occupants to help keep, the market values a little bit higher and keep the overall exterior appearance of the properties. Unfortunately, it is just accurate in that owners tend to take better care of their properties than tenants do, which again is another risk that we can dive into a little bit more when it comes to real estate. But that owner occupant, it kind of helps keep the aesthetic of the neighborhoods higher. So you do want that owner occupant portion. And then if you get in the 60% tenant pool, it guarantees that you will constantly have a set of qualified tenants available when your property becomes vacant. So I think that 60-40 and what we've seen in that markets that are flipped, if you've got a 80% tenant ratio, those are your areas that are typically higher in crime, and it's more difficult to rent on a non-Section 8 voucher. And we do accept Section 8. There's nothing wrong. We have a lot of investors that prefer Section 8. We have a lot of investors that do not want Section 8. But if you cannot get the property rented without offering Section 8, I feel like that's a red flag, and that area is probably not conducive to a good turnkey fit.
Well, you're pigeonholing yourself into not being able to accept tenants outside of Section 8. So like you're saying, is finding a property where if you can or cannot, that you want to have the option as the owner of the property.
100%. You definitely want that. And then, of course, on the flip side, if you've got an 80% owner occupant versus tenant, then what we see is that the price, those are your higher end areas, those are your A+ areas, and the purchase price just doesn't make sense to generate a good return. Your rent ratio percentage is pretty low.
Yeah, because finding a tenant that's willing to pay the rent that you would need to cover the mortgage for the average property in that area is probably slim to none, right? It's a lot harder to find candidates that fit within that pool, that's willing to pay that amount.
Right. And the rent values just don't hold to the purchase prices in those particular areas. So
you threw around this word a couple times, turnkey, and what does that mean exactly?
That's a really great question. And I'm really glad that you're asking that. And we're having this conversation. Our website, we put out a lot of blogs. We talk about this a lot because I do feel like this word gets thrown around a good bit. So I'm actually going to dive into about 3 different kind of sectors. So just kind of stay with me.
Get your popcorn ready, guys.
Get ready, guys. No, but essentially the general concept of turnkey means, hey, you're purchasing a property that doesn't need any kind of renovation, hands-free. Here are the keys. It's ready to go. Right. So I think everybody can agree that that's essentially what, quote, turnkey means. But what I've seen around different platforms and investors communicating, and even, quote, turnkey companies are using it differently. So to Spartan, turnkey is, hey, we do everything. We are a one-stop shop. We'll purchase the property. We will renovate the property. We will place a tenant in the property. We'll sell it to you, and then we will continue to manage it. And so when you say all of these different brands, you've got Corinth Construction that's building brand new homes. You've got Spartan Invest that is renovating the properties for investor clients. And then you've got Atlas Rental Property that is still continuing to manage the properties after the fact. It sounds like 3 completely different companies, but we are housed in the exact same building. We're under the same management, same leadership. It is one company. We are a one-stop shop. And that is a huge distinction because a lot of companies will sell, quote, turnkey properties and partner with property management companies that are outside of their company and say, hey, yes, we are turnkey, and that's fine. We just have different definitions of the term. However, I do feel like knowing the difference and being able to ask the right questions to knowing the difference in when you're dealing with those particular companies is huge for investors wanting to get in the game of real estate.
Well, it's like, how involved do you want to be as the property owner? So if you're looking to build a real estate portfolio, specifically rentals, are you wanting to be an active landlord where you are having to go and make the repairs and you're having to go collect the rent? And so when we talk about turnkey, is it just a turnkey property, meaning you don't have to do major renovation, but now, hey, you're left on your own? Or is it from start to finish, you are simply investing into the process we've already built up? And I think that's a really good thing to distinguish for the listeners if they're interested in doing this, because that can really make your process and experience, 100% different.
Mm-hmm. Very much so. And I do think that you need to sit down and ask yourself, hey, what do I want out of this experience? How involved do I want to be? And then what I've seen in doing this in the last 10 years, I'd say, is that investors getting their foot in the door and starting to invest in real estate spend all of their time on the property, the renovations, hey, what's happened, what year was the property built, et cetera, et cetera. And it's all focused in on the property. And I'm not saying that that's wrong, but not taking the time to evaluate post sale of the property. And that is the most important thing. And I might be jumping the gun, and stop me if I am, but the property management piece is the most important thing in investing in real estate.
Okay, so talk to us about that.
Sorry.
Yeah, because a lot of people are, where they're like, oh, well, is it important to have a property manager? Because we know that there is a cost associated with that. And so again, I think it's like the return on investment when you have a property manager. In your experience, what does that look like? And is it worth it to the average real estate investor?
Man, those are some great questions. And there's just a lot of information, just kind of surrounding that topic in general. So first I'll start with, if you wanting to manage the property yourself, you need to make sure that the property is in your area. It is almost impossible to manage a property that you can never lay eyes on. The amount of cost that you're going to spend on sending people out to your property that are not working for you, an independent contractor is who you're going to have to find to lay eyes on your property, is going to be outrageous. And a property management company will handle that for you at a much, much smaller cost. So if you are going to manage your property, you really need to make sure that it's in your area. And if that's what you want to do, that's perfectly fine. But what we have found is that most of our investors, and just the whole country, the heavily populated areas are where real estate is unaffordable in regards to a turnkey real estate investment. You got Southern California, Hawaii, New York. And so those areas, it just doesn't make sense. The numbers just don't work to purchasing, I guess, single family turnkey real estate. So buying in those specific areas, it's just a little bit more difficult. So when you're buying out of state and you're remote purchasing, it's just going to be really hard to be successful at managing it yourself. So when you're looking at other property management companies, there are several things to take into consideration. It is very important that you find the right team and do the due diligence when you're locating who you want to, essentially run your investment. That's your retirement. That's your kid's college fund. So, ask all of the questions. Interview your property management companies. What is your occupancy? What's your maintenance ratio? What is that, what is the process for if my tenant doesn't pay? When do you file for the eviction? What does the eviction process look like? Because eviction processes change from state to state.
Managing inventory with spreadsheets just doesn't cut it anymore. You spend too much time doing the manual tasks of tracking down inventory, fixing errors, and just wondering where all of your items are located, all of which slows down the fulfillment process and takes away from focusing on your business and what you love. Now, SKU Vault solves the most difficult challenges in omni-channel and e-commerce fulfillment. They manage and track inventory at scale. Financially Free Journey listeners are actually eligible for free onboarding training through the end of 2021 when you sign up for a free demo with one of the e-commerce experts. Now, SKU Vault helps solve critical needs like all the integrations, first of all, marketplaces and features you need for faster e-commerce fulfillment. It eliminates stockouts and oversells with industry best quality control and reporting. And there's affordable plans for businesses of all sizes, from startups to large enterprises. Now, as someone who has personally built several e-commerce stores from the ground up, I can say that SKU Vault would have saved me a lot of time and stress if I had known about it from the get-go. When I started my first e-commerce store, I didn't realize the amount of time that I would be taking by tracking inventory and barcode scanning and serial numbers and accounting, and how much it would actually monopolize my time. Now, it created major burnout for me, and it took away the passion that I had for my business. SKU Vault will help you focus on your passion and take care of the hard work behind the scenes to help you stay organized and maximize your profits. So make sure that you click on the link in the show notes to go to the SKU Vault dedicated landing page just for our listeners. You're going to be able to schedule your free demo and onboarding in just a matter of minutes. Now, stop trying to do it all and start focusing again on the part of your business that you love with the help of SKU Vault.
If there's a maintenance issue, when am I contacted about it? What's the amount threshold? I mean, there are several questions that you need to know. And when you're asking what their KPIs are as a property management company, they need to be able to answer them. And I can't stress this enough, in that if you're interviewing a property management company, you're like, okay, so what's your portfolio's occupancy? Well, I mean, it's about 85. They're not tracking it.
Yeah.
And that is beyond important. Now, these are averages, right? So you can't guarantee that your property is going to fit into that average. There are outliers, but it is a good indicator of the probability of the performance of your investment property. So it's huge to know those questions. What's your maintenance ratio? What's your average move out cost? These are things that need to be tracked and need to be focused on. And that's what you need to demand out of your property management partner.
Okay, so for someone who's never invested in real estate, they've never dealt with a property management company, what are costs associated, or like a range? So that way, when they are interviewing a property management company, they know whether this is industry average or it's, way too expensive, or on the flip side, it's too low, which is also a red flag.
Right. Now, that's a really great question. And the ranges, they do, it's a pretty wide range. And I think a lot of times the fees are kind of mirror, your portfolio volume and the company that you go with. And for example, like if you go with a full service turnkey company, our property management fees are not as high as other just standalone property management companies. It's because you've already done business with us. You've purchased the property from us, so we don't charge as much on the back end.
Got it.
And stuff. So I do think that that's a fair distinction, because you'll hear our fees then compared to another property management company, like, wow, theirs is so much lower. It's like, well, we've already done business together. We're already in this kind of partnership, relationship. So, your property management fee average is usually anywhere from 9 to 12%. And then there's additional fees for leasing fees. And so that's placing a tenant in the property. And that usually includes, hey, we're taking people to your property. We're showing your house. We've got marketing dollars invested in your property on getting it on Zillow, which is pretty expensive now these days. So we're getting it on Zillow and Trulia and Hot Pads. And so there's cost associated with all of that from the property management standpoint. So you'll see that some of those fees getting the tenant to be renewed. There's usually additional eviction fees if the property management company has to evict your tenant. And then there's some property management companies do upcharge on maintenance and move outs. And some of those can vary. Sometimes there's a 5% increase. And then sometimes there's a 20% increase. And I think those are really the nitpicky ones, because everybody asks, okay, well, what's your property management fee? Oh, well, this guy's is 8% and yours is 9%. So I'm going to go with the 8%, property management fee. Okay, well, they increase the maintenance by 20%. So every time you've got a maintenance fee, you just tack on another 20% to that. And so
you have to make sure you're comparing
questions.
apples to apples, right? So that, like you said, they need to know their KPIs. You need to know what questions to ask, and then make sure that you are comparing the same, information. So again, if one is charging 9%, but it's all encompassing versus one is charging 8%, but then, you're on your own when it comes to evictions or, whatever the example is, it's like, how much is that going to cost you if that arises? It may be worth paying an additional percentage to have that covered and have it be included in the fee that you're already paying.
Right, 100%. And there is a trend going for kind of your flat rate property management companies, and that you can kind of choose your coverage. It's like, hey, you know what? I want the full deluxe coverage. I want you guys to handle absolutely everything with no additional fees. And it's going to be X number a month, no matter what the rent is. And if that's a model that would interest you as well, then hey, that's definitely look into some companies that offer that.
Oh, good to know. Well, it's good to know, again, for people that are looking into getting into real estate investing. That is one of the first questions that I think comes up is like, yeah, I got to identify a good property. We got to find a good market, but also how am I going to manage it? And that can scare people off who potentially could be great real estate investors, but they don't know how to be a landlord and they don't want to be a property manager. And so it's like, is that something that's worth the cost associated? So I think that really helped give some more insight to that. That made me think about my next question that I really want to dive into, which is cash flowing properties. We hear this a ton. There's tons of gurus online, right? It's like, this is how you find a positive cash flowing property. But again, in today's market, it feels like it's really hard to find a good cash flowing property because people are paying way over asking prices. And as you mentioned earlier, there are still really great deals. So can you give the listeners some specifics on how to find and identify a good cash flowing property?
That's really, that's a tough one, in that I will say that right now in the real estate market, if you are looking to purchase, if you're not partnering with a turnkey company, right, that's got the properties already ready for you to evaluate. If you are on Zillow trying to find a property that will cash flow, you need to look at all of the comparative rental rates and how they differ from everything else that's on the market. So you've got your particular property, right? And you say, okay, so this is a 3-2 and Zillow says the rent is going to be $1,200. But the seller is asking $250,000. So now you need to factor in, hey, okay, so what's your monthly income going to be? And then annualize all of these numbers and take out your taxes, insurance, and then your property management fees if you are going with a property management company. So you take out all of those expected costs. Okay, and I know your listeners probably already know this, but factor in 5% for vacancy, factor in 5% for maintenance, factor those in. And then you'll get to see what your annual cash flow will be. And that way you can evaluate what your rate of return is and whether or not that's good for you. And that we have a lot of investors that would prefer to buy higher end or new construction homes for a lower rate of return because of the deferred maintenance. And then we have some investors that, hey, I would like a cheaper house. I don't want to be out of pocket as much. I want my cash flow to be a little bit higher. I'm okay with the risk of maintenance. So I think asking yourself those questions and like, hey, look, I'm okay if I'm going to buy a house built in 2010. I'm okay paying a little bit more because I know the maintenance isn't going to be as bad as a house built in the 60s.
Right. You're like, okay, am I going to have to redo the plumbing and electric, work? I mean, that stuff can add up so much. And so, you always see it on like the HGTV, like flip or flop, and they open up the walls and it's like, oh, it's going to be $50,000. But I mean, that stuff can really happen. So don't be tricked, yes. By thinking, oh, well,
please know that happens.
Cheap. Yeah. You're like, that happens more times than not, especially with older homes. So yeah. Is there a certain amount or percentage, I guess, that, of positive cash cash flow that's like, hey, this is a good deal. What I mean is, if the mortgage is $1,000 a month and, you're looking for 20% over that to be positive cash flow, to be like, hey, this is a great deal to pull the trigger on. Do you guys have a threshold that you look at?
Right. Our average cash flow is over $200 a month. So that's kind of usually our line in that, hey, we're not going to probably move forward with purchasing a property. And when we're evaluating the property, we have that calculation all figured out. Our territory managers are walking the property. They're putting in, hey, what all needs to be done to the property. They're putting in what the rental rate is going to be. And then hey, that calculator spits out what they can buy the property for and what the investor's return is going to be on the tail end. So if it doesn't meet that particular threshold of return or cash flow, then we don't even purchase the property.
Oh, good to know.
Yeah. So we're taking a lot of efforts on the front end before we ever even purchase a house to make sure that it's going to meet all of that criteria. And that's really, really hard, especially if you're trying to buy remote, if you're not partnering with a company, because you're relying on, you're relying on what you think the rental rate's going to be. And what if the property has a really steep driveway? And I say that and you're like, oh, well, that's not that big of a deal. Well, it is. Our rental calculator deducts $25 if the property has a steep driveway, because that's a really big deterrent for a family. And so we take all of these value-added rental traits and all of the non-value added rental traits. And those are all factored in. Hey, if it's got a flat back, if it's got a flat yard, if it's got a fenced in backyard, if it's got a carport versus garage, all of those things factor into what the property will rent for, which ultimately determines what your cash flow is going to be. So all of those factors are huge.
Oh, yeah, absolutely. And again, it's understanding how to take all of that into account and understand, like you said, what's going to be the monthly income, annualizing those numbers so you can get a real rate of return, and doing your due diligence. And as you said, to not be rushed into, feeling like I need to enter the market now because interest rates are low. Because if you go in and you buy a property that maybe isn't a positive cash flowing property, not a good rate of return, what you save on interest, you'll end up paying more later on because you didn't make a good deal. And so I think really understanding those numbers is really critical. And then again, understanding the role of a property management company and how they can really, I think, save you a lot of heartache, and probably there's a lot of monetary, connection around what they can save you as well if you hire a good property management company. Attention to all of my Nashville, Tennessee area listeners. Commodore Express is actively hiring truck drivers right now in your area. Are you not happy with being a number or a username on the other end of a computer, or maybe you're tired of just endless hours of sitting around and waiting and wondering when and where you're going next? Do you have maybe a hard time remembering who your family is, or even the last time that you were home? Well, Commodore Express doesn't have those problems because their teams run West Coast runs weekly, and they typically work on a 5-on, 2-off schedule. Now, their regional solo drivers are with 10 hours of Nashville, and they enjoy sleeping at home several nights a week. Commodore Express also offers a full benefits package and above average pay for the industry. So get a grip on your financial future by securing a job that offers great pay, great benefits, consistent miles, and consistent paychecks. All you need to do is visit them online at www.commodoreexpress.net to learn more about them and to request an online application, or you can actually simply call Robert at 615-287-5140. That's 615-287-5140 and get started today.
Oh, there is no, there's no end to talk about the amount of money that you could lose and or save with the right or wrong property management company. I mean, you're talking about properly placing tenants, like just right from the get-go. If your property management company doesn't fully vet that particular tenant, then you are going to be stuck with that tenant, and you're going to have to be forced to have to evict them. And I'm sure everybody knows right now, we just got the eviction moratorium extended, and it hurts. It hurts. But
I could hear the angst in your voice, Lindsay. I mean, really though, but like you said, I mean, on the front end of fully vetting a tenant, I mean, even in now more than ever is such a critical, and if you've never done that before, that could be a make or break decision that, could potentially impact your entire, investment portfolio if you don't have a good tenant.
100%. Yes. I mean, it's just that property management piece. Every aspect of it it's just crucial.
I mean, 9 to 12% sounds like a good amount to pay to not have to have that heartache and worry, and leaving it to professionals that have done this time and time again and really understand it, especially if you're looking at investing in real estate remotely, which seems to be almost like the only option nowadays. Like you said, if you live in a big area where, I mean, property prices are insane. People are waiving inspections and coming in all cash offers, $100,000 over asking price. I mean, the stories that you hear are crazy right now.
Oh, definitely. I mean, and that doesn't make it a bad market to invest, however, it just makes the due diligence that much more important.
So if the listeners could only take away one thing from this episode, they have amnesia of everything else that we talked about. What's the one thing that you want them to take away when it comes to getting into real estate investing?
I think the biggest question for your listeners, or from me, my personal opinion, now this is just my opinion, but I do think that, like we've talked about, the due diligence, the research, and ultimately the biggest takeaway is determining whether or not real estate is for you. And while I personally believe that, real estate is the best vehicle to get you to your financial freedom and your wealth goals. I genuinely believe that and know that. And I'm practicing that personally and professionally. So while that is my opinion, it is not for everyone. There are going to be risks. I'm not a salesperson. I'm an operationally minded individual. And so I will not paint rainbows and butterflies about turnkey real estate for you. There are going to be times where you have a tenant that will move in. They passed flying colors through all of our we vet tenants very, very thoroughly. And so we'll have tenants that will pass with flying colors and move in and will not pay a dime for no reason. Like that is going to happen. It's going to. You'll have tenants that will move in and take a sledgehammer to the walls. We've seen that happen. That is going to happen. It's not whether or not it does or doesn't happen to you. It's going to happen to you if you put your time and your money into real estate. It's just going to happen. However, that doesn't mean that it's a bad investment. I just take my personal property. Me and my husband bought probably about 7 years ago. And we had that happen. We moved a tenant in. They didn't pay anything. We had to go through the entire eviction process. They were set out. The next tenants that we placed, from the application standpoint, were weaker than the first tenants that moved in. They've been a tenant of ours right now for about 5 years have paid by the fifth religiously, and it's been a great investment. So just being aware and knowing that those are going to happen, I feel like is really the mindset that you need to get in before you decide to whether or not real estate is going to be for you, because you just have to know and come to terms with the risks that are with real estate. And I'm pretty sure I'm probably negatively selling real estate at this particular point. I apologize about that. I don't. No,
you're a realist. It sounds like you're a realist. Because again, it's making sure that we don't paint the most optimum picture of the situation and then expect that to be the outcome. I mean, of course, the most optimum, reality is that all of your tenants pay, you get in, you have great, great properties, right, great tenants, low maintenance, but that's just not the case. And so understanding the reality of real estate investing and also, mitigating risk through, as you said, turnkey as an option, property management companies, and then doing your due diligence on the front end and really understanding understanding how to vet good tenants. Because like you said, I mean, a lot of people, they know how to, pass with flying colors on paper, but sometimes that's just not going to be the reality of what type of tenant they are. So, we can't undermine the importance of someone who has experience and expertise in the field. And I talk about that a lot with the listeners on this show is, sometimes it's important to pay to play because the return that you're going to get on the back end will supersede what you would have gotten if you were trying to figure it all out on your own, which is what I'm hearing from you when it comes to turnkey investing.
Right. And, I agree with what you're saying as far as like, if you want to do this on your own, hey, by all means, get out there and do it. It's just going to require a lot of time and research and energy. And if that's what you want to do, then you can do it. And the information is out there. You can make the educated purchases, et cetera, et cetera. But, I do think that just for ease, I'm also a mother of 3. So anything that saves me time.
I'm right there with you. Yep. So any shortcut we can take.
Anything that we can do to make our day-to-day easier, that is my game. So, but 100%, the information is out there if you want to do it on your own.
Okay. I love to ask all of my guests this question. What is the best and the worst piece of financial advice you've ever gotten? Oh, I see. That's like the reaction I always get, and I love it.
Man, that's a great question. Honestly, I know the worst.
And that's always what people answer first is the worst. So, you're falling right in line, Lindsay.
I'll start with the worst and not really financial advice. Gosh, I hope my dad never listens to this. But when I told him I was leaving my very steady, stable career to pursue real estate investment about 10 years ago, he told me I was crazy. And, not to do it. What was I thinking? And really just kind of laid it on thick, the advice and why real estate was not a very viable investment at the time and stuff like that. So I hope you're like,
I'm gonna prove you wrong, Dad. I'm gonna prove you wrong.
Sorry about that, Dad. Did it anyway. Let's see. Gosh, the best really, financial. Man, that's tough. I don't know.
You're like, it's all good. Okay.
All the advice that I've gotten, it's been pretty, I will say maybe it's not the best, but I do like all of the differing opinions, and that me and my husband took a really, really long time to come to terms with our idea of what is the best path forward for real estate just for our investment. And it actually took me a really long time to get him on board with rental property. He's a Dave Ramsey, all debt is bad. You don't leverage yourself ever, and knowing and us being able to really kind of push through what is the good versus bad debt, et cetera, where we're comfortable. And that wasn't really, advice, but his different mindset versus mine and how we kind of work through that and set up our own family financial plan was I think really beneficial. So,
instead of just looking at things through rose-colored glasses and it's like, hey, I only want to hear that my idea is good. It is good to get opinions and to hear the advice of people that may have a differing opinion than you, because it's going to give you perspective and it's going to give you clarity on your, thoughts and belief around certain financial decisions and specifically investments. And it sounds like against all odds, through your dad saying real estate is not the path forward, Lindsay, and your husband saying all leverage is bad, all debt is bad, you still have pressed forward and you guys have, generated a combined revenue of almost $50 million. So I would say you being a hardhead was the best thing that you could have ever done.
See, I'm going to get that in writing and I'm going to show that to my husband all the time and be like, look, me being hard-headed, it just works.
I'm going to put it on a plaque and I'm going to give it to you for their Christmas presents. So, well, thank you so much for coming on the show today, Lindsay. That was so fun. And again, like real estate, there's so many different aspects to it, and really like focusing in on the turnkey part of it is something that we haven't done yet on the show. So I think that this is going to really, sit well with the listeners and give them another perspective of information to research. And with that being said, where can they find you if they have more questions or they want to check out your guys' company?
Thank you so much for having me on. And I really hope that your listeners are able to take some tidbits away from this episode. And if you want more information, we have a ton on our website at spartaninvest.com. And if you're interested in speaking to one of our sales associates, and hey, what are the next steps or what? I just want to learn more. I just want to know more about Turnkey. We are there to answer those questions. Even if you don't buy Turnkey with us, please, we still just want to talk to you and we want to give you the information. Our website is full of, we've got an investor guide, we've got a property management guide, we've got market reports on every single market that we're in. We want to put the information out there so you guys can make the best informed decisions. So please visit us at spartaninvest.com.
Oh, I love it. I'll make sure to link it in the show notes, guys. That way you can just click on it and you can go check out Lindsay's website and, see what they're all about. And again, those resources are critical because increasing your knowledge is really going to help you with your success in meeting your money goals. So with that, thank you so much for tuning in today, guys. You know where to find me. It's at Financially Free Journey, TikTok, Twitter, Instagram. I mean, all the socials. I'm all over the place. And, I post daily tips and, motivation to help you with your financially free journey. Until next time. Hey, my Nashville, Tennessee listeners, don't leave quite yet. I want to remind you about Commodore Express and that they're actively hiring truck drivers as we speak. If you want to be able to get out from the desk, get on the road, and be able to see your family more and receive competitive pay, Commodore Express is perfect for you. I want to make sure that you know the number, which is 615-287-5140, or you can simply go to their website and I'll make sure to link it in the show notes.